All right. Hey, everyone. Welcome back for another deep dive.
Yeah?
Today, we're going to be tackling a topic that's been making waves.
Oh, yeah.
Decentralized finance, or as most people know it, DeFi.
It's huge.
It is. And to help us navigate this complex world, we've got excerpts from a book called How to DeFi Beginner.
I've heard great things about that one.
Me too. It's highly recommended by, well, a lot of the leading figures in the DeFi space.
Yeah, I can see why.
Yeah, and after reading it myself, I totally get it. It's packed with insights. So consider this deep dive your crash course into DeFi. We'll explore its potential, its challenges, and give you the knowledge to start navigating this exciting new landscape.
Sounds good. You know, it's interesting. One of the things that really struck me about DeFi is how it's tackling some of the biggest problems with traditional finance.
Oh, absolutely. And the book does such a good job of laying out these issues.
Yeah.
And think about the last time you tried to send money internationally.
Oh, don't even get me started. It's like pulling teeth.
It's such a pain. It's slow. It's expensive. There are multiple fees, hidden fees sometimes.
You have no idea where your money is half the time.
Right. You're just like, is it ever going to get there?
Exactly. And, you know, the book actually cites a World Bank estimate that a staggering 1.7 billion people globally are unbanked.
Wow.
Yeah, DeFi's accessibility, especially through mobile phones, could be a game changer for those people.
Yeah. So instead of having to rely on those traditional institutions, people can access financial services directly through DeFi.
Precisely. It's about empowering individuals.
I like that.
And it ties into another key point the book emphasizes, which is transparency.
Oh, yeah. Huge.
Traditional finance operates in this sort of black box, right? We have very little insight into what's happening behind the scenes.
So much for too big to fail.
Right. We just have to trust that these institutions are acting in our best interests.
Yeah.
DeFi, on the other hand, is built on these principles of open source, community-driven development. Everything is out in the open.
So you can see the code?
You can see the code, you can audit it, you can verify it.
Yeah.
It's all transparent.
Yeah, that's a pretty big difference.
It's a fundamental shift in power.
Yeah. So how does this all work? I mean, what is DeFi? How do you define it?
Well, the book uses this analogy of money Legos, which I think is brilliant.
Money Legos. Okay. I'm intrigued.
Yeah, it's this idea that DeFi is all about these different financial services that you can kind of mix and match like building blocks to achieve your own financial goals.
So instead of going to a bank for a loan or a savings account or to trade stocks, you can do all that directly through DeFi.
You got it.
By using these different building blocks.
Yeah, but instead of a bank acting as this intermediary, everything's handled by code, specifically these things called smart contracts.
Smart contracts. Okay, we hear that term a lot.
It's a buzzword for sure.
But what are they?
In essence, they're agreements written in code that automatically execute when certain conditions are met.
So, like, if this happens, then that happens.
Exactly. It's all automated.
Yeah. Okay, so smart contracts replace the bank, but what gives them the power to manage all this money?
That's where collateral comes in.
Okay.
It gets locked into these smart contracts to ensure security and trust in the system.
Interesting. So I guess it's kind of like putting down a deposit.
It's very similar.
To guarantee that everything's going to work as agreed.
Exactly. And because it's all handled by code, there's no need for this central authority, this bank or institution, to manage or enforce anything.
Okay, so we've got these smart contracts, we've got collateral.
Yep.
We're moving away from this traditional financial system, but where is all of this actually happening?
Most DeFi applications are built on a platform called Ethereum.
Ethereum. Okay.
Yeah.
Remind us, what is that?
Think of it as this global decentralized computer.
So like a world computer.
Exactly. And anyone can access it and use it to build applications.
So it's like the internet, but for finance.
That's a great way to put it. And one of the things that makes Ethereum so powerful is that it allows anyone to create and deploy these smart contracts that we were talking about.
Okay, I'm starting to get the big picture here.
Yeah.
But these contracts need some way to handle the money, right? Is that where cryptocurrency comes in?
Absolutely. To interact with these smart contracts, you need Ether.
Ether.
Which is the native cryptocurrency of Ethereum.
So you need that to actually use them.
Yeah, you need Ether to pay for the execution of these smart contracts.
Got it. So we've got Ethereum as the platform, we've got smart contracts as the building blocks, and we've got Ether as the fuel that powers it all.
That's a great summary.
All right. I'm feeling pretty good about this so far.
Awesome.
But what can you actually do with DeFi? Like, what are some specific examples?
Well, that's where things get really exciting. One of the biggest innovations in DeFi is the creation of stablecoins.
Stablecoins. Okay, I've heard of those, but why are they such a big deal? I mean, isn't cryptocurrency known for being super volatile?
Yeah, that's true. But stablecoins are designed to address that very problem.
No.
They're pegged to stable assets, like the US dollar, to minimize price fluctuations.
So it's kind of like having a digital version of the US dollar that you can use in this DeFi world.
Exactly. And it's a huge deal because it opens up all sorts of possibilities for things like lending, borrowing, and even payments.
Okay, I'm definitely ready to dive deeper into these stablecoins. What makes them tick?
Well, the book highlights two main types of stablecoins: centralized and decentralized.
Wait, how can a stablecoin be centralized if DeFi is all about decentralization?
It's a good question. Centralized stablecoins like Tether are issued by companies that hold reserves of traditional assets, like US dollars, to back the value of the stablecoin.
So you're essentially trusting that this company's actually holding the reserves that they claim to have.
It is a matter of trust.
So it's kind of like trusting a bank in a way.
Yeah, it's very similar.
Okay.
And that's where decentralized stablecoins come in. These aim to eliminate that need for trust in a central entity.
Yeah.
The book really focuses on a stablecoin called DAI,
DAI.
which is created through a platform called MakerDAO.
MakerDAO. All right.
Right.
What's so special about MakerDAO?
MakerDAO uses a pretty fascinating mechanism to create DAI, relying on cryptocurrency collateral and algorithms to maintain its peg to the US dollar.
Okay, this is where I need you to break it down for me.
Right.
How can an algorithm guarantee a stable value?
Well, imagine a system where you lock up some of your cryptocurrency, let's say Ether, as collateral.
Okay.
Based on the value of that Ether, you can generate a certain amount of DAI.
Oh, I see.
This is called a collateralized debt position.
So it's like taking out a loan, but instead of borrowing from a bank,
Yeah,
you're borrowing from this MakerDAO system
exactly.
by putting up your crypto as collateral.
You got it.
Yeah.
And the system is designed to ensure that the value of the collateral is always greater than the amount of DAI that you create.
Okay.
This helps to maintain the stability of DAI. If the value of your collateral drops too much, the system will automatically liquidate some of it to cover the debt and protect that peg to the US dollar.
Oh, that makes sense. Okay, so there's like this built-in safety mechanism.
Right.
But what happens if the price of Ether just crashes suddenly?
Yeah.
Like, wouldn't that cause this ripple effect?
Yeah.
And potentially destabilize DAI?
It could, and that's where the algorithms come in.
All right.
They're constantly monitoring the market and adjusting the parameters of the system, like the collateralization ratio, to try and maintain stability.
So even if there's like a flash crash,
Yeah.
the algorithms are supposed to kick in
You should.
to protect DAI's value.
In theory.
In theory, okay.
But in practice, things can get a little bit more complex.
Right.
The book actually mentions this event called Black Thursday.
Black Thursday. Okay, this sounds ominous.
It was a pretty wild situation
Oh no.
where a massive market crash almost took down MakerDAO.
Wait, so this whole system almost collapsed.
It came very close.
That's a little scary.
It was a bit hairy, yeah. In March 2020, the price of Ether plummeted, causing this cascade of liquidations on MakerDAO. The system was overwhelmed.
So it couldn't keep up.
It just couldn't keep up. And for a brief moment, DAI actually lost its peg to the US dollar.
Oh, wow. So even with all these algorithms and safety mechanisms, things can still go wrong.
Absolutely. DeFi is still a young and experimental space.
Yeah.
There are always risks involved, but the important thing is that the MakerDAO community learned from that experience.
Good.
And implemented changes to make the system more resilient.
Okay, well, that's good to hear. So I guess it's like anything new. There are going to be growing pains, but hopefully it's getting more and more stable.
That's the goal.
So we've got these stablecoins now. What can we actually do with them in DeFi?
Well, one of the most popular use cases is lending and borrowing.
Oh, okay.
Remember those money Legos we talked about earlier?
Yeah.
Stablecoins are some of the most popular bricks
Okay.
in the DeFi world.
So you can lend out your stablecoins and earn interest, just like you would with a traditional savings account.
Exactly. The book highlights this platform called Compound Finance as a great example.
Compound finance.
You can deposit your stablecoins into this pool, and borrowers can then take out loans using those funds.
So it's almost like peer-to-peer lending, but without actually knowing who the other person is.
Exactly.
But how are the interest rates determined in this system? I mean, there's no central bank setting them, right?
Right. It's all based on supply and demand.
Okay.
The more people who want to borrow a particular asset, the higher the interest rate will be. And conversely, the more people lending, the lower the rate will be.
So it's like a free market for lending and borrowing.
Exactly.
Yeah.
Governed by these algorithms.
Wow. That's pretty cool. What's really fascinating is how the book describes these platforms like Compound as money markets.
Yeah.
It really feels like we're building this whole new financial system from the ground up.
It is a pretty radical departure from traditional finance.
Yeah, and these money markets are just one piece of the puzzle, right? I mean, the book also talks about decentralized exchanges, or DXs.
Yes. DXs are a huge part of the DeFi ecosystem.
So instead of going to a centralized exchange like Coinbase or Binance, you can trade cryptocurrencies directly through these DeFi protocols.
You got it. DXs allow you to trade cryptocurrencies without having to rely on that central authority or giving up control of your assets.
Okay, I like the sound of that. But how do these DXs actually work? They don't have order books like traditional exchanges, right?
Right. They work a bit differently. The book uses Uniswap as the prime example.
Uniswap, okay.
And it utilizes this mechanism called liquidity pools.
Liquidity pools. Okay, before we move on, I need you to explain what a liquidity pool actually is.
Sure. Imagine a pool with equal values of, let's say, ETH and DAI.
Okay,
This pool facilitates trading between these two assets.
got it.
So when you want to buy ETH using DAI, you're essentially adding DAI to the pool and removing some ETH.
Okay.
And the ratio of assets in the pool then determines the price.
So instead of trading with another person,
Yeah,
you're trading against this pool of assets.
exactly.
Okay.
And what's really clever is that the price is determined automatically by an algorithm called an automated market maker, or AMM.
An AMM.
Okay.
So it's all automated. There's no like human intervention setting the price.
Nope, it's all done by the algorithm.
Okay, that sounds super efficient, but what happens if someone tries to make a huge trade? Wouldn't that drastically change the ratio in the pool
Yeah,
and then affect the price?
that's a great point. And that's where this concept of slippage comes in.
Slippage. Okay, what's that?
Slippage refers to the potential for price changes on large trades.
Okay.
The more you trade, the more you might impact the ratio of assets in that pool and thus the price.
Oh, I see.
So there's this kind of built-in incentive to make smaller trades.
To avoid that slippage.
Exactly.
But what about the people providing the liquidity? I mean, what do they get out of it?
Well, that's the beauty of this model. Liquidity providers earn a share of the trading fees generated by the pool.
Oh, that's interesting.
It's a way for users to passively earn income by contributing to the ecosystem.
Okay, so it's kind of like a win-win.
It can be, yeah. As long as you're aware of the risks.
Right. That's pretty amazing. It's like a whole new way to think about investing and earning returns.
It is.
Okay, I'm ready to level up again. The book also talks about decentralized derivatives.
Ah, yes, derivatives.
What are those all about?
Derivatives can be a bit complex,
Yeah.
but essentially they're contracts that derive their value from an underlying asset.
Okay.
So in DeFi, derivatives allow you to speculate on the future price movements of cryptocurrencies and other assets without actually owning them.
So instead of buying Bitcoin directly,
Yeah,
I could use a derivative to bet on whether the price of Bitcoin will go up or down.
exactly. You're just betting on the price movement.
Okay.
The book highlights this platform called Synthetics,
Synthetics, right?
which allows you to create and trade synthetic assets, or synths,
Okay.
that track the price of real-world assets.
Mm-hmm.
So I could buy a synth that tracks the price of gold
You could?
or Apple stock, all within this DeFi ecosystem.
You got it. Synthetics offers a wide range of synths,
Wow.
giving you exposure to various asset classes without ever leaving the decentralized world.
Wow, the possibilities are really starting to open up here, but
Right.
I have to admit, this is getting pretty complex.
It can be, yeah.
What about people who, want to participate in DeFi,
Yeah.
but maybe don't have the time or expertise to manage all these different protocols and investments?
That's a valid concern.
Sure.
And that's where decentralized fund management comes in.
Decentralized fund management. So it's kind of like having a robo-advisor for DeFi?
Exactly. The book introduces token sets,
Token sets.
which is this platform that automates your crypto portfolio management.
Okay.
It bundles assets into these ERC20 tokens called sets,
Okay.
each of which follows a specific trading strategy.
So instead of me having to pick and choose individual assets,
Yeah.
I could just buy a set that aligns with my risk tolerance and investment goals.
Precisely.
And the platform will automatically rebalance my holdings
It will.
based on whatever strategy I chose.
Yeah, so it takes the guesswork out of portfolio management.
Oh, I like that. That sounds perfect for someone like me who's still kind of, learning the ropes.
It's a great option for passive investors.
Does the book mention any specific sets that are worth checking out?
Yes, it highlights the DeFi Pulse Index Set, or DPI.
DPI, okay.
It tracks the top DeFi tokens, giving you broad exposure to the sector.
So it's like a DeFi index fund.
It's very similar, yeah.
Yeah.
And what's interesting is the book's analysis showed that TokenSet's strategy actually outperformed most individual assets just held on their own.
Wow. Okay, so that's a good case for diversification and for this automated management.
Definitely.
Okay, let's move on to something a little more fun.
Fun.
The book mentions decentralized lotteries.
Oh, yes, lotteries.
Tell me more.
Well, decentralized lotteries offer this unique twist on traditional lotteries. They leverage the power of DeFi to create these no-loss lotteries.
No-loss lotteries. What does that even mean?
It means you don't lose your principal, even if you don't win.
Wow. Okay, how does that work?
The book focuses on pool together as a great example.
Pull together, okay.
Basically, everyone pools their money together,
Okay.
and that pooled money is then used to generate interest in a DeFi protocol like Compound.
Right.
And one lucky winner gets all of the interest earned,
Okay.
but everyone else gets their original principal back.
Oh, that's interesting. So you're essentially giving up your individual interest earnings for a chance to win the whole pot.
Exactly.
I kind of like those odds.
It's a gamble, but a pretty safe one.
Yeah, and what's cool is that anyone can participate regardless of their location.
That's right.
I love how DeFi is creating these new ways to participate in these kinds of activities that were previously limited by geography or financial barriers.
It's a very democratizing force.
Yeah. Speaking of breaking down barriers, the book also covers decentralized payments.
Ah, yes, payments.
What are those all about?
Decentralized payments aim to revolutionize the way we send and receive money, making it as seamless and efficient as, say, sending an email.
Oh, wow.
The book highlights a platform called Sablier,
Zaplayer, okay.
which focuses on real-time payment streaming.
Real-time payment streaming, that sounds intriguing. Tell me more.
Imagine being able to pay someone by the minute or even by the second.
Wow.
That's the power of Sablier.
Okay.
It allows for these continuous automated payments.
So I could set it up so that every hour
Yeah,
a certain amount of money goes to someone.
exactly.
That could be huge for people who work on a freelance basis or who get paid hourly.
It could.
It eliminates the need to wait for invoices or paychecks.
Precisely. The book actually mentions this consultant who uses Sablier to charge clients on a per-minute basis for consultations.
Oh, wow. So it's actually being used.
It is. It's a perfect example of how this technology can be applied in the real world.
It's amazing to see how DeFi is disrupting so many different aspects of finance.
It really is.
But let's be honest, it's still a pretty risky space.
There are definitely risks.
What about decentralized insurance? Is there a way to protect yourself from potential hacks or losses in DeFi?
That's a great question. And it's something the book addresses directly.
Okay.
DeFi is still relatively young.
Yeah.
There are definitely risks involved, but the community is constantly innovating, creating new ways to mitigate those risks.
Okay.
And one of the most promising solutions is decentralized insurance.
Decentralized insurance.
Yeah.
So instead of relying on a traditional insurance company, you can get coverage through DeFi.
Exactly. The book focuses on Nexus Mutual as a prime example.
Nexus Mutual, okay.
It's a platform that provides coverage against smart contract failures and other DeFi risks.
So if a smart contract gets hacked or there's some kind of bug that results in a loss of funds,
Yeah,
Nexus Mutual can step in and provide compensation?
precisely.
Right.
And what's really cool is that Nexus Mutual is a mutual, meaning it's owned and governed by its members. There's no central authority calling the shots.
That's amazing.
Yeah.
So the community is essentially pooling its resources
They are.
to protect each other from risks.
Exactly.
But how does the claims process work? Who decides whether or not to pay out a claim?
That's where these risk assessors come in.
Risk assessors.
Yeah, they're members of the Nexus Mutual community who stake their own NXM tokens, which is the platform's native token, to back insurance policies.
So they're kind of like a decentralized version of underwriters.
You got it. And these risk assessors review claims
Okay.
and vote on whether or not they should be paid out.
This is blowing my mind. It feels like we're building a whole new financial system
We are, in a way.
based on trust, transparency,
Mhm.
and community governance.
It's a pretty radical experiment.
It is.
Yeah.
Okay, before we wrap up, I have one more question about governance.
Sure.
Who runs all these DeFi protocols?
Yeah.
I mean, there are no CEOs or boards of directors, right?
Right. That's one of the most, radical aspects of DeFi. Governance is often distributed among token holders.
Okay.
So the more tokens you hold, the more voting power you have.
So it's like a democracy.
It is.
But instead of voting for politicians, you're voting on how these protocols should be run.
Precisely. The book highlights Aragon,
Okay.
which is this platform for creating decentralized autonomous organizations, or DAOs.
DAOs.
Yeah, and these DAOs are essentially internet native communities with these built-in governance mechanisms.
So it's like a company, but without all the bureaucracy and hierarchy.
Exactly. The book uses AV, which is a lending protocol,
Right.
as an example. They use Aragon for their governance.
Okay.
So token holders get to vote on proposals
Right.
that shape the future of the protocol.
So everything from interest rates to new features?
All of it.
That's incredible. So the community has a direct say in how these protocols evolve.
That's the idea.
But how do you keep track of all these different protocols and tokens and voting mechanisms? It just sounds so overwhelming.
It can be, and that's where these DeFi dashboards come in.
DeFi dashboards. Okay.
They aggregate all your DeFi activity in one place, giving you a clear overview of your portfolio and the various protocols you're interacting with.
So it's like a command center for your DeFi journey.
Exactly. The book focuses on Zapper as a great example.
Zapper.
Yeah. It pulls in data from all your connected wallets and protocols,
Okay.
showing you your assets, your debts, even your yield farming activities.
Yield farming. Hold on. What's yield farming?
Oh, that's a whole other rabbit hole we could go down.
Maybe we'll save that for another deep dive.
We probably should, yeah.
But for now, I'm just excited to explore these dashboards
Yeah.
and get a better handle on all the amazing things happening in DeFi.
It is an exciting space, but we shouldn't forget that DeFi is more than just code and protocols.
Right.
It's about real people using this technology to solve real-world problems.
You're right. Let's move on to part 3 and explore some of those real-world applications of DeFi. Okay, so we've covered a lot of ground in this deep dive.
We have.
Stablecoins, lending, derivatives, DAOs, even decentralized lotteries.
It's a lot to take in.
It is, but it's clear that DeFi is really pushing the boundaries of what's possible in finance. But I'm curious,
Yeah.
are people actually using this stuff in the real world? Or is it all just, theoretical at this point?
Oh, it's definitely being used. In fact, the book shares this really powerful story about how people in Argentina are using DeFi to combat hyperinflation.
Wait, really?
Yeah.
Argentina? Okay, tell me more about that.
So Argentina has struggled with hyperinflation for decades.
Right.
And it's made it incredibly difficult for people to save money or plan for the future.
Yeah, I can imagine.
Their currency, the peso, is constantly losing value.
Yeah?
Traditional financial institutions haven't been able to offer reliable solutions.
That sounds incredibly challenging.
It is.
So how does DeFi come into play?
Well, people in Argentina have started using stablecoins, particularly DAI, as a way to protect their savings from inflation.
Oh, I see.
Because DAI is pegged to the US dollar.
Right.
It offers this much more stable store of value than the peso.
That's amazing. So they're essentially sidestepping the traditional financial system.
Yeah.
And taking control of their own financial well-being.
Exactly. It's a powerful example of how DeFi can empower individuals and provide access to financial services that were previously unavailable or unreliable.
It's really inspiring to hear how people are using this technology to overcome real-world challenges.
Yeah.
It feels like we're witnessing this financial revolution in action.
It's definitely a paradigm shift.
And the book highlights another key aspect of this revolution. Censorship resistance.
Oh, yeah.
Censorship resistance.
Mm-hmm.
What does that mean in the context of DeFi?
It means that no single entity can control or restrict access to the system.
Okay.
Transactions are recorded on this public blockchain, which is distributed across this network of computers around the world.
So governments or corporations can't just, shut it down
They can't
or block certain people from participating.
Not easily, no.
That's pretty powerful.
It is.
And the book actually shares this interesting anecdote
Oh, yeah.
about how Uniswap, a decentralized exchange, tried to implement geo-blocking to restrict access from certain countries.
It's kind of ironic, right?
Yeah. So Uniswap tried to censor its own users.
It did. But because the Uniswap protocol is decentralized, it lives on the blockchain.
Right.
It doesn't live on any specific website.
Oh, I see.
So while they could block certain front-end interfaces,
Yeah.
people could still access the protocol itself
Through other means.
through alternative interfaces.
So the attempted censorship basically backfired.
It did, and it really highlights this inherent resilience of decentralized systems.
Right.
They're just incredibly difficult to control or censor.
That's a powerful message.
It is.
It feels like we're entering this new era of finance,
I think we are.
where individuals have more control, more freedom, and more opportunities.
More power to the people.
Yeah. I have to say, after this deep dive, I'm inclined to agree with the book's argument. The DeFi is not just some niche technology.
Yeah.
It really is the future of finance.
It has that potential.
This has been an incredible journey. I feel like I've gone from DeFi novice to at least being able to hold my own in a conversation.
Well, you're doing a great job.
Well, thanks to you. For our listeners who want to dive deeper into this topic,
Yeah.
I highly recommend checking out the book we've been discussing today, How to DeFi Beginner. It's a fantastic resource. It's packed with even more insights and examples.
It is. And there are so many resources available online as well.
Definitely.
It's a rapidly evolving space, so it's important to stay up to date.
Absolutely. Well, that's all the time we have for today's deep dive.
Okay.
But I hope this is giving you a good overview of what DeFi is all about, its potential, and also some of its challenges.
And its real-world applications.
Yeah. And I'm really excited to see what the future holds for this space. Until next time, keep exploring, keep learning, and keep diving deep.
See ya!